Hi everyone, today we're going to discuss how owning a home could affect your tax return. As you may already know, in order to deduct the mortgage interest, you have to itemize in your tax return. So if you are using your home for primary residence and you have mortgage interest, whether this will help you or not depends on your filing status. So for example, this year, if you are single, the total standard deduction you're able to get is $13,850, and if you are married, your total standard deduction is $27,700. So what that means is the first $27,700 for you is non-taxable if you're married. So now, if you have your mortgage interest, charitable deduction, state and local taxes, if all of those expenses is over the standard deduction of $27,700, then you'll probably have a benefit. So for example, let's assume your real estate taxes and state and local taxes is $10,000 and your mortgage interest is another $20,000. So as a result, your total deduction you're able to get is $30,000, which is basically $3,000 more than your standard deduction. However, if this individual is single, that individual's standard deduction would be $13,000 and change, but his itemized deductions based on the current example I gave is $30,000. As a result, the home mortgage interest is helping the single individual more significantly than the person who is married filing joint. So to answer your question, whether you own a home and you're paying mortgage interest, all of that benefit will depend on your filing status. Also, if you are renting your home out, this will also allow you to take rental income and expenses relating to the home for the portion of the home that is rented out. So what does that mean? Let's assume that you have a two-family home, you live in the first floor, you rent out the second floor. In that situation, all of the rental income that you have, you'll report that income, and against the rental income, you will deduct expenses related to the home for the rental portion. So that means any mortgage that you have, you'll be deducting 50% of the interest, 50% of the insurance, 50% of the repairs, utilities, any other related expenses that is indirectly allocable. Any direct expense, for example, you did repairs on your rental portion of the home, renovation that you did on the rental portion of the home, all of those expenses will be directly deductible for the rental portion purposes. For your personal side, you will only deduct the 50% of your mortgage interest as well as real estate tax deductions.